Hey, welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug. I'm president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can check out all of our terrific podcasts at americastalking.com. To support Everyday Economics, please make your tax-deductible charitable contribution by clicking the link in the show description. We're recording today's episode on Thursday, June 22nd, and joining me as always, my friend and colleague, Dr. Orphe Divounguy, PhD economist. Are you doing well? Is the economy doing well?
Look, the economy looks in pretty good shape, actually, right? It's kind of surprising because we talked about recession. Remember recession, but no recession. Recession delayed, recession postponed is what I'm hearing. Goldman Sachs just revised the probability that we end up in a recession in the next 12 months from 35% down to 25%, I believe. EY did the same thing. They revised their odds of recession in the next 12 months down to now below the 50% mark. It seems like, the recession odds are receding.
I called out what was factually the technical recession that we had, which was frankly pencil whipped away. So while we did have a recession, it was a blip. And, we have since moved on. Other countries around the world have undergone beyond a technical recession. I feel like we're sort of teetering still in that gray area. But it would sure seem to me, based on what EY, Ernst Young, and what Goldman are saying in their current guidance, each of these reports were released recently, like within the last couple of days, a much rosier picture. So let me ask you this. What are they seeing that a lot of people otherwise wouldn't be able to see on their own?
Look, I'll tell you what I'm seeing. The labor market is still in pretty good shape. And as long as we continue to get some labor force participation, some growth in the labor force, we're going to continue to be in a very good shape. Of course, if growth in America's labor force slows to a standstill, right, and basically stalls, then growth is also going to stall. And if growth stalls, then a small shock could send us into negative territory. It's kind of a sign that we're at the end of this expansionary cycle. And at the end, usually, you hit a wall. And when you hit a wall, you get a decline in activity and the labor market softens and the unemployment rate goes up. As long as we continue to see increase in labor force participation, we're in good shape. Then you have disinflation still happening, right? You have prices coming down and, consumers have some improvements in their purchasing power. And that's helping to support consumer spending. And by the way, as long as consumer spending is supported, economic activity is not going to crash. You're going to continue to avoid a recession. You also have homeowners sitting on really good, near record home equity, able to consolidate debt, the costly debt. That housing wealth supports consumer spending. And also the stock market, right? That stock market wealth, right? We're talking about the wealth effect here, right? That stock market wealth, even though the stock market last month was back to where it was at the time, the S&P 500 was back to where it was at the time the Fed started hiking. Year to date, it's done pretty well. And so, you have that extra wealth that's contributing to the comfort that consumers are feeling. And as long as consumers are okay, the economy is going to be okay, And so that's what I'm seeing. Last but not least, financial conditions are easing. They've eased a tremendous amount since the banking turmoil back in February or March, right? And so all of these factors are contributing to why recession odds are declining or receding, and why the Fed has more, firepower or ample room, I would say, or cover to raise rates a couple more times this year.
You'd reference the market. The market this week has been highly reactive. The market 3 days in a row has just really been trounced after massive growth last week. And, when you read the sort of like the dailies, I'm always kind of like trying to do my best not to roll my eyes at why why pundits are saying the market is doing this or not doing that or whatever the case might be. But Fed Chairman Jerome Powell is in the process of testifying today on June 22nd, his second day of testimony. I have no idea what he said. I'm not even sure that the hearing has begun, but the market is sort of turned around inside of the day. How influential at this point is whatever Jerome Powell saying to the outcome of daily movement inside of the market?
I think the smart ones, the smart commentators understand that you cannot completely remove a company's performance and companies in general from the economy. Because ultimately, if the economy is in the toilet, pardon my expression, the stock market is likely going to be. And so you had this kind of increase last week because of the pause, right? The Fed paused and some people, it got the markets really confused, right? Some people thought, maybe they're pausing because they know something we don't know. Some people thought, they said they're going to just skip. He mentioned the word skip a couple of times, right? And that they're going to raise rates again, right? And then at the same time, you have a lot of mixed economic data coming at you, right? You have a strong labor market, although that labor market is cooling and you're looking at unemployment claims are increasing now or ticking up. You have that strong labor market, yet unemployment claims have increased a little. You have very stubborn core inflation number that's just not moving at this point. 2 months in a row, I think we're staying around the same place. And then, but yet at the same time, you have a lot of disinflation on the some disinflation on the housing side. I can't say a lot, but some disinflation on the housing side. And then you have the producer price index that actually fell in May, right? Actually fell for 3 out of 4 out of the last 4 months. A falling PPI tells me that CPI is likely going to continue to decrease. You have these mixed signals coming at you. On one hand, the economy is doing well. On the other hand, the economy is not doing so well. But what I say to our listeners is trust the trend. Trust the trend. And the trend says disinflation will continue and the economy will continue to cool. That's my takeaway. I think people are too worried about the day to day. And I guess that's the risk of being so data dependent. Like the Fed wants to be data dependent. No.
I think you're hitting the nail on the head right there. Is that we are like this is one of those things where, in much the same way that if you look at your 401k every single day, that you'll sort of drive yourself mad. If you're looking at the economy and the signals inside of the economy, the milestones, the benchmarks, the things that are being decided, and you're looking at for a result on a day-to-day basis, like the overreactivity to the market one way or another, I think you can drive yourself bananas. It's just, this has to play out. We were in a bull market for so long. And then, of course, everything that we did, we pulled all of those levers, and frankly, overstimulated the economy during COVID. And so now this is almost like a settling out period where we're like literally the economy is making sense of itself.
Yeah, high volatility. I think people got excited last week, and now there's just an adjustment back down, right? And but ultimately, I think the U.S. economy is not accelerating. I think it's actually cooling. It's cooling, but it's cooling the right way. It's not crashing, right? It's cooling. It's just like a plane approaching the runway needs to slow down. The U.S. economy is slowing down. And we're ready for that landing anytime now, anytime. We've been waiting for that landing. But yeah, just a year ago, we were at 9% inflation, right? And so we just need to learn to be a little patient. And I think pundits, especially, I listen to all the stock market shows, man. They have all types of theories. But the bottom line is that the U.S. economy is cooling, and the Fed will hike a couple more times to try to cool, to get inflation to moderate back down to a level that is consistent with sustainable economic growth. And that's what they're going to do. And so, there's no point in coming up with crazy theories. We just have to trust the process. This inflation continues. We're going to get there.
Always a pleasure. Thanks so much for the insights. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics. and dozens of other high-quality podcasts at americastalking.com.